You see how it has really been selling throughout the week. Now we anticipate some form of exhaustion to the upside. So today will be more like a TGIF. Thank God it's Friday. And you see it's also in this weekly bullish fair value gap here. So we can measure this range. The range, you can start from the body or the wick, right? This range here to anticipate your exhaustion of this candlestick. So at least it should buy to 50%, 50% of this here. So let me, and you see these are 1 hour buy side liquidity here, just at the 50%. You guys, so the video you just saw was the video of me anticipating price to retrace to at least 50% of the weekly range. So let's go to the weekly time frame here. So this is what we have in the weekly time frame. I pointed out this bullish fair value gap here that I was really interested in seeing this be very sensitive to price. So I said that we can measure this to this here. So that's the week to week and the 50% of the weekly range about here. But before that time, prior to this time, price did not expand this much. Yeah, did not expand this much. So we're still looking at it going to the sell side liquidity, but we were still inside this weekly bullish fair value gap BC. Okay. So now what is a TGIF? TGIF is literally an abbreviation for thank God it's Friday. Okay, it's just one of an ICT trading model. The concept behind the TGIF is that price should retrace to at least 50% or 25%. That's to say at least 0.25% or 50% of this weekly range here. Price should retrace to those points. That's to say you should expect to see some form of exhaustion here. Price should exhaust to this point. If it was selling, you expect it to start buying to at least 50% of its weekly range. So if the weekly candlestick was buying, you anticipate it to sell at least to 25% and 50% of that weekly range. Okay, so that's just it for the TGIF. So let's go to the daily time frame to see what we had. So in the daily time frame, we had this bullish fair value gap here. This is a bullish fair value gap, a daily bullish fair value gap. So DFVG represents daily fair value gap. All right. So let's go to the 4 hours time frame. More details. So right here at the 4 hours time frame, we have this swing low here. So this becomes our sell side liquidity. So if we had any draw on liquidity, this would have been our closest draw on liquidity, focusing on the sells here. To watch it draw right to the sell side liquidity. This way we had that the sell side liquidity was taken right there from this 4 hours time frame. So once we scale down to the lower time frame, you will see those level like the sell side liquidity here very obvious. So we also had this 4 hours bearish fair value gap right here. So now let's go to the 1 hour time frame. So now from this 1 hour time frame, you've seen how this is really obvious here, and this looks more like an equal low right here. So that's an equal low, relative equal low there. So you've seen how price came down right from this 4 hours fair value gap, and it also have a 1 hour, has a 1 hour fair value gap right here. So this 1 hour fair value gap dropped right to this daily bullish fair value gap here, and also took out sell side liquidity. Remember, we are anticipating it to retrace at least 50% or 25% of the weekly range. Okay. So now let's go to the 30-minute time frame. So just inside this daily fair value gap, we have this bullish 30-minute fair value gap. So that's also very important to us now. So very importantly, at the daily time frame, we have an order block right here too. Let me show you that. That area too is also very important for those of you that trade with the order block. Okay, using this US 100, you see how it lapped here. It did not come right to this order block here. It came to only this fair value gap here. So I'll show you much later using the NASDAQ contract for June. Okay, so let's continue. We are the 30-minute time frame. We had this bullish 30-minute fair value gap. So now let's go to the 15-minute time frame to see how it reacts from there. So in this 15-minute time frame, we have this 15-minute fair value gap right there. Right, that's a 15-minute fair value gap right there. So you've seen how price is staying inside the 30-minute fair value gap, the daily fair value gap, and also the 30-minute fair value gap. Right, they just come in sync with each other. So let's go to the 5 minutes time frame. So in this 5 minute time frame, we're seeing this inside the 15-minute fair value gap, and we don't have a fair value gap here except this point here. But since this is a higher time frame fair value gap, this area here is much stronger than seeing it come right here. So that's where sometimes I expect some fair value gaps in the lower time frame to be left open. So we have this breaker right here. Since this is a low, for those of you that have been asking what a breaker block is, so this is what a breaker is. We've taken out a low, this is a lower low, and we've taken out a high. This here, this down up close candle, this is the breaker here. So I've really been seeing a lot of things online. That is not an ICT breaker. A lot of people are really getting this breaker wrong. So you want to see it take out a low for it to be qualified as a breaker block. You need to see it take out a low, take out a high, then this up close candle becomes a breaker. So a breaker block is literally a failed. So in this case now, a breaker block is literally a failed bearish order block. You understand? So this did not act as a bearish order block to sponsor price to the downside. It disrespected it, so we expect it to act as an inverse of that. So a breaker block is literally an inverse of what it originally was. This this and a bearish order block here is a bearish order block here. Took out a low, shifts the upside. This is a breaker block now. So I'm still going to make a video on this breaker block here to explain deeper to you. So now let's go to the 1 minute time frame to see how our entry will be like. So you've seen how this qualifies as a breaker now. It has taken out a low right here. This a series of up close candle, consecutive up close candles here. You see now it took that out, came down here. So this is a breaker, right? So now this is literally for the TGIF. This is how you would have entered from, let's say, if you wanted to enter from this 15 minutes fair value gap, bullish fair value gap here, is still right after it took out this low here. This sell side liquidity taken right here. Sell side liquidity taken from here. Let me take this 15-minute out here. So we have this minor sell side liquidity taken from the 1 minute time frame. And we have this quick expansion to the upside. We have this breaker block here. This can be your entry. Yeah, if you miss this entry, this is another entry right here. From the bullish fair value gap. Alright guys, so this will be your entry, and for your stop loss, you have your stop loss, your entry here probably at this, let's say 15 minutes or breaker, 5 minutes breaker, first entry. Have it here after this quick expansion to the upside. And where would your stop loss be at? Your stop loss will just be at this low, at this low here. Then you'll be targeting the closest buy side liquidity. But since we are anticipating it from we are anticipating it to retrace to at least 25% of the weekly range or 50% of the weekly range. This is what you can do. You can go to the 1 week time frame. Take your Fibonacci, measure this candlestick here. So once you measure that, your take profit will be at firstly the 25% here, secondly the 50% here. So this 25, 0.25 here is really our interest for the take profit, and the 0.5 here is our interest too for the take profit. And you see how that aligns with the 4 hours fair value gap. Let me show you. It aligns with the 4 hours fair value gap and the 1 hour fair value gap. Have you seen that? No random. So if we go to the 1 minute time frame now, now your first take profit should be here. This is the 25% level here. This is the 25%. Remember the color was red. Mm. It is close to this buy side liquidity here, so you can just take your profit here. Let me just get the 1 week 25% from the weekly time frame. So this here, this is the 25%. Let me mark it out now so you can see clearer. So this is the 25% of the weekly range here. Let me change the color to um let's use I think purple for that. Then this 50% here, the green here. Let me keep this green here. All right. So these are this one here below this one below is for the 25% of the weekly range, and this here is for the 0.5, also 50% of the weekly range. Okay. So don't get it mixed up. So let's go to the 1 minute time frame. So you see that. So you see how close it is to this buy side liquidity here. So this can become our first target for profit. So target day or take profit. So our first take profit will be here. That will be our first take profit. So we are also looking at it retracing to the 50% of the weekly range. See, this is also the 50% of the weekly range here, but we still have it above here. 50% of the weekly range. This is it here. You see, if I take this out, that will be the green, and so we can keep our targets there. Set another target for take profit. So if our entry is here, say it means that take it right here. So you see how it aligns with this buy side here, and also this buy side liquidity here. There is also a buy side liquidity here, so you can still target this for your take profit. So you can still target that for your take profit. So this is it for the TGIF, guys. So your stop loss can be below this breaker too, still not bad. You can still keep your stop loss below this breaker. This comes with experience. So this is it for the TGIF. Okay. So I trust this was insightful and you've really learned too. Till next time.